the last type of, or one of the last types of retail liquidity for today is going to be breakout traders, buy stops and sell stops. Why do traders use the breakouts? Breakouts, what is this, right? So those traders who are anticipating a high or a low be broken, these are where sell stops and buy stops come into play. So if you are in a downtrend, right, if you're in a previous downtrend, you're going to be placing a sell stop below a low, right? So your low is where sell stop is going to be placed, because those who don't have the patience or those who don't know how to enter, they believe that when a low is broken, price is just going to do what? It's just going to keep continuing to go lower, lower, lower. So their stop order is just a pending order that gets activated once price breaks a low, the sell stop. After this is stopped, it's the sell is then activated. So they're expecting this to happen, but in reality, they're getting in by the time it's way too late, right? Same thing for buys. If you're in a bullish market, where you buy stops occur, those who expect new higher highs to be made, they don't want to wait. They're just going to place their buy stops right here, and they're going to expect price to continue. We know now why it makes sense for this to be a retail strategy. So they just want to catch positions after highs broken, after low is broken, so they can be in the trend, right? This occurs in all types of markets, but specifically those who are in trending markets. Again, they're looking at a base level just for new lower lows, new higher highs. That's all that they're looking for, right? So go ahead, draw out these two quick examples, and then type 1 when you're done with that. Great. All right. Awesome. So keep moving forward. Again, this is basic day one. This is not everything. just not to get your guys' hopes let down. This is just the baby steps, right? So let's keep going forward. So breakout traders, millions of retail traders want to catch the move after it happened, and they're induced into seeing something on the wrong side of the market, right? So as we just talked about, you have buy stops and sell stops above and below every structural point. The purpose is to collect these buy stops and sell stops, and then reverse price to completely stop them out. So what happens is, as soon as their buy stops, oh, here's my high that's broken and an uptrend, here's my order. They're going to get in. They're going to be like, oh my God, yes, it's tagged in on me making money. And then what's going to happen? Price will then reverse against them completely and entirely. Those who are looking for sells when a low is broken, oh yes, my order's tapped, great, maybe put up some more, and then their move is just going to completely get stopped out. And their stops, again, their stop losses, but this is where they're getting activated, hoping it's going to go higher. Their stop loss is going to be back within the range, because if once the range is broken, they just want price to continue. Once it comes back in the range, once it comes back, they want this to happen. Once it comes back in, right, their stop loss is just going to be right before their entry. So again, sells, as soon as the low is broken, their entry is activated. Their stop loss is just going to be a little bit inside of the low, and then they're just going to completely stop out. So what do we focus on with this? We focus on thinking like a breakout trader and doing the opposite. Key note right here. If you think like a breakout trader and do the opposite, your whole perspective as a whole will start to slowly switch. Pretty drastic at that point, right? It'll start to drastically switch. So do the opposite of what breakout traders do. The expected outcome, price will trigger, then SL stop orders, it'll get triggered, will then stop out the orders, and then completely reverse in the opposite direction. That's the ideal scenario, right? That's the ideal, is it'll take out a new low. Or what can happen is, the second option is stop orders can get triggered, they'll get then stopped out, and then price will continue. That's the other scenario. So go ahead and draw both scenarios over here. One, and we have two. You guys another 10, 15 seconds, and we will carry on. Almost out of break. We'll get a couple more slides. So a 15-minute break. Awesome. All right, we're gonna go ahead and continue. So at this moment in time, identify where breakout liquidity is lying. Where are buy stops and where are sell stops? Go ahead and identify them. Based on where price currently is, remember everybody, based on where price currently is, that's what we're forecasting. And remember, structural buy and sell stops, they occur at structure points, right? We're only selling above lower highs, higher highs, right? Got it. Boom, awesome. All you guys identified, great. Think about it. In this scenario, what are we looking for? Well, we identify the breakout liquidity. So the first place that we should be looking to sell, right, is we want to be selling above some form of breakout, right? So a breakout position here, we know here, once this high is broken, we have some traders who are looking for buys here, right? So we have a buy potentially above here. At that same token, like you guys have, we have below here, we have sells. Below here, high, low, we have sells. And above here, we have buy stops, right? So let's identify the order block for the black line, right? If that is the gas, what is the second thing that is needed for price to go anywhere? The second step, mind you, the order block, right? So let's see. Boom, we've identified our order blocks. Awesome, right? So now we've identified our order block. Now the last thing to do is figure out what the move is going to look like. So presumably, like you have, taken out buy stop into our order block that has imbalance, right? And then we're going to be targeting a new sell stop, right? A new sell stop, so on and so forth. So this is the exact move that we would anticipate. Price takes out the stop into our order block, and then price absolutely reverses into, right, another stop area. Key insight right here for a very near future conversation. Now the last one that we are going to be doing in this instance, everyone, first things first, identify the trend. What is the trend at this point in time? Bigger picture. What is the trend, right? You don't want to get caught up in the small. What's the bigger picture trend? We see all this from the left that we're looking for general buys, right? Great. Looking for general buys. Cool. Picasso, like it. After you identify the buys, now we want to identify the breakout liquidity. Where is the breakout? Where's the buy stop? Where's the sell stop we need to be taking out? Where's the breakout trader we need to collect to go higher? Great. So we know here that in order for us to go higher, we need to look to buy below where sell stops are, right? So here, there's our sell stops. You guys already ahead of me, order blocks, awesome. So we know at this moment in time, range, we have below, we have our high. We're going to be taking out a low into our order block that is unmitigated and then coming to a new high. And this is how it's all working. Again, same about trendline liquidity. Further supports our confirmation, right? Further supports our buys. This order block over here has, again, not been mitigated, and then we're going to be continuing higher. There's so many factors as to why this is a very high probability trade, besides just what we're looking at. Again,